Welcome to the latest episode of A Quest for Twice. Today, I want to wrap up my research about Intel stock. So, let's first take a look at the risk analysis of Intel as a company. In this summer, in July, Intel announced the delay of its rollout of 7 nanometer chips by 6 months. And if there are further execution missteps, that will lead to soft sale or pricing power. As a result, its revenue will suffer, and that will reduce the operating margin and the profitability of both cash flow as well as net earnings. So that's a risk. Another risk is, as I mentioned in the last episode, Intel will be rolling out new products as a result of its previous investment in R&D, including the first ever discrete GPU by Intel and new memory chips and other new specialty chips. And they will be designed to handle different workloads as specialty chips. So they should have a good market in front of them. However, those new products could flop. As a result, the past R&D investment would be wasted. And even worse, that really raises the question how valid its current R&D program is. And keep in mind that Intel invests about $13 billion each year in R&D. So if its R&D program is not generating organic growth, then that's really money wasted. The $13 billion is a lot of money, as I will cover later on. Intel returns about $14 billion each year to its shareholders. So $13 billion in R&D is a big chunk of money and could have been used to just return to its shareholders. But it's currently used in R&D with the hope that it will raise future revenue. Another risk factor is not really related to Intel as a business, but it's more about the valuation. So currently, the semiconductor sector has tracked Nasdaq performance in this year. So it has sky high valuations. As something that's valued very high, it will likely lead to a decline down the road. Probably will be sector price decline, which may cause Intel stock price to suffer in sympathy. So that's not really any value event that impacting the value of Intel. If anything, that will increase the value because then Intel stock will be sold at an even better price. However, that's also a dilemma. That's if I purchase Intel stock now, then better sale may be available down the road. Another risk I want to point out is that it may take a long time, in my mind, 12 or more months for Intel to regain growth momentum, given that it takes time for its new chip product line to be ready, to be shipped, and to take up market share and reflect its quarterly performance. So since I have a goal of a quest for twice within 2 years, so it may take a longer horizon for me to really to see Intel's contribution to my goal of making significant return through investment. However, I do believe that my advantage compared to professionals will be my strategic patience to buy good company at an attractive price, regardless if it's going to take 2 or more years to materialize for the market to realize the underlying value of the good business. And therefore, I want to point out this risk, but it's not going to deter me from owning Intel, even if it takes a much longer time for its stock price to reflect its real underlying value, or to reflect the value from its past investment. For Intel, what's the investment thesis? It's really buy one get one free. What does that mean? That means buy one profitable business on sale currently and get the future potential growth for free. I want to stress that it's really potential growth. It's not a given. There are a lot of uncertainties given that Intel's competitors are also innovating and rolling out new business and new products. It's no guarantee that Intel's R&D will yield organic growth down the road. However, that's the nature of an investment. You have to make educated guess. Sometimes you are unlucky, but if you stick to your framework and always make a reasonable bets, I believe that the investor will be rewarded. So what are the definitions of investment success? It's not really about the stock price, because the stock price eventually should reflect the underlying business. But in the short term, or even in the midterm, it's driven by market sentiment. My definition of investment success, the number one is a strong execution. No further significant delay to its 7 nanometer chips rollout, and also the other key new products, including the discrete GPU chips. The second one is for Intel needs to maintain its robust profitability. So the current trailing 12-month operation income is about 26 billion, given that it's delayed rollout of its next generation chips, and also its competitors AMD and Nvidia are making good progress with their own products. So I'm going to give a little room to say the trailing 12-month operating income needs to stay above $23 billion. So it's about 10 to 15% less than its current trailing 12-month operating income. And why $23 billion? Because that should lead to about $14 billion free cash flow in 12-month time span. And why $12 billion free cash flow? Because currently Intel pays annual dividend and buy back stocks for about $14 billion each year. So $14 billion Intel uses to reward its shareholders. Its current market cap is about 222 billion as of October of 2020. So $14 billion is 6.3% of its market cap. So it's rewarding its shareholder in a rate of 6.3%. Given the current very low interest rate environment, 6.3 of a shareholder return is very respectable. So that's why it's considered a valuable and cheap business, because it's rewarding its shareholders fairly richly. Third one is no significant increase of debt. The current debt load level is $38 billion, as reported by Intel in July 2020. And because there are always a risk of borrowing to pay in dividend or share buyback, and that's why I want to also put this metric as a measurement of its profitability. The third one is really the best one is Intel needs to regain growth. Uh, so I would give Intel 18 months to establish a trend of revenue growth from data center group. That should mean that Intel's GPU rollout has been a success. Its CPU in servers has been continually taken up by its customers, and its specialty chips business are doing well. So 18 months from today will be 6 quarters. So hopefully, with several quarters, 2-3 quarters of reporting a firm trend of revenue growth from its data center group will be established. Of course, the sooner the better. But I measure my investment success in the time span of 18 months, given how big Intel is and how many quarters you need to take to firmly establish the revenue growth trend. So if all these three definitions of success are met, then it will be a really good investment, because I would have bought Intel at a very attractive price as a value stock, but with the growth returning, and hopefully the market by then will reward Intel and value Intel as a growth stock, not as a value stock anymore. But even with Intel as a value stock, an annual shareholder reward of 6.3% is really something not to be laughed at. It's a very respectable rate of return to its shareholders. So here you go. I have summarized my investment thesis in Intel stock. And what my execution strategy is just waiting for Nasdaq to moderate, and when it has a reasonable amount of pullback, then I will execute and purchase Intel stocks. Until next time,